This is huge.
For people to hang their hat on that, to me, that's silly. The numbers were okay. The call was terrible. The stock being down 10% makes sense to me because the call was so bad. Dumb call. Dumb call. That's like so pie in the sky. When I look at the estimates went down. It's crazy that some people came away from the call thinking this was a good call. It was a terrible call.
That's right. Gary Black just called out a take like Stevens on earnings call silly. He did not call out Steven by name, but I think he's thinking about him. Let's dive in. This was a pretty good one.
This whole thing with having another OEM in negotiation, it's very different negotiating using your charging network versus the brains of your product.
It is indeed different. I would say that Tesla licensing full self-driving technology would be a much bigger deal than Tesla allowing other automakers to access its supercharger network.
And you've already seen Volvo say, "Hey, yeah, we want to be in your charging network, but we're not going to see the ADAS autonomy stuff because that's really important. The charging is not that important to us." So I hear people saying, well, they got one OEM on the charging network, and therefore they're going to get a whole bunch of people on FSD. That just doesn't make any sense because one is really important, the autonomy, and one is kind of, think of an iPhone. Okay, if you're using the same charging base, that's not the same thing as using the guts of the phone. So I don't think anybody on the institutional side thought that was such a deal. And Elon has promised this before. A couple of years ago, he said that he was talking to some OEM about autopilot or enhanced autopilot, and that never turned into anything. So for people to hang their hat on that, to me, that's silly.
And that was where Gary called a take like Stevens silly.
And here's the big one. Are already in early discussions with a major OEM about licensing FSD. This is huge.
Gary clearly does not think there was a bombshell dropped on the earnings call. If there was, it was a bad bombshell. Gary does have a point though. A few years ago, Elon did say that Tesla is in talks with an automaker about licensing autopilot or enhanced autopilot, but that was not specifically full self-driving, so I think it is a bit different, but I understand why Gary has trust issues and I don't blame him for that. But at the same time, the argument that Gary made, he said that automakers really do not want to license Tesla's full self-driving technology. So think about this. The moment they actually do, this is going to become a much bigger deal than just having access to the Tesla supercharging network. It appears to me right now that institutional investors are in disbelief that this could ever even happen. They don't even assume that there is a good chance of that ever happening. I strongly disagree with that. I think Steven, if you are a long-term investor, has a much stronger case here. I'm just not sure when we will have the first company licensing full self-driving technology from Tesla. It could be a while.
Listening to you guys, I think you're all in la la land. Obviously, the stock is down because it was not a great quarter. If you look at the actual numbers, they came in at 91, but you back out that 328 million of FX intercompany account, whatever, it came in right in line. The auto gross margin was 18.1. The single thing that management needed to do on the conference call to make people feel better is to give confidence that the second quarter auto gross margin was trough, and they didn't do it. And instead, what Elon said, which was just, I've talked to so many institutions and nobody gets it, is, well, if interest rates keep going up, we're going to probably take prices down again, which, as you know, the Fed's going to be taking rates up again next week. So that's why the stock went down. That's why earnings revisions have been negative for 2 days. 23 number has gone from 345 to 341. The 24 number has gone from 475 to 471. What frustrates me is that there were so many positive things that they could have talked about. Cybertruck launching is huge. And, as you said, in 2021, when Model Y launched, huge volume growth the following year, you had a halo effect to the entire brand.
I said this a while ago that going forward, if Tesla cuts prices, the stock price is likely going to come down instead of going up like it did in January. And Gary's right about the interest rates going up in just a few days. It's almost a guarantee that they will go up. So I can certainly see how Tesla stock investors would hear Elon say, if interest rates go up again, we will have to cut prices for Tesla vehicles. I can see how Tesla stock investors hear that and then think, yeah, the prices are actually going to come down again. So let's sell Tesla stock. If my investment horizon was anything less than 5 years, I would certainly be paying a lot of attention to that, and I would not be happy with that statement. But I think there is also a broader picture to really consider. Not only did US auto loan application rates decline over time, but also of those people that did apply, the rejection rate has surged. It's almost double from the peaks of last year. All of this is while Tesla is increasing production rapidly, saturating the market with Tesla EVs.
So I came away thinking, okay, the numbers were okay. The call was terrible. And, at this point, the stock being down 10% makes sense to me because the call was so bad. So,
What was really bad about the call, Gary?
because there was one thing they had to get clear to people, and that's that auto gross margins had bottomed, and and everybody knew the quarter was going to be bad, meaning they were going to be down from first quarter. First quarter was 19, second quarter was 18.1, but now you got everybody worrying the third quarter is going to be even lower, and that's what the analysts did, and that's why the stock went down, because people took down their auto gross margin numbers for third quarter and for the full year. Because Elon got on and said, hey, we may take prices down again, even though we're in a deflationary commodity environment. So it just, the call didn't hold together. It's like you bring prices down if you think that, commodity costs are going to continue to fall. But I don't quite understand what the need was to say, well, if interest rates go up, and unless he was trying to send a signal to the Fed, which is silly, Fed doesn't listen to him, that we're going to take prices down if you raise interest rates. I mean, do you think Jay Powell really cares about that? Of course he doesn't. So
No,
I
I
just thought
don't
it was
think.
a dumb call. Dumb call.
I personally prefer the prices to come down a little bit more so that you can really hurt the competition, which in the long term I think would benefit Tesla actually, which is the exact same opinion that this billionaire also has. So I did not take that as a negative. It actually allows me to buy Tesla stock at a cheaper price short term. Just to be clear, I don't want Tesla to cut prices just for the sake of dropping prices. I would want Tesla to only drop prices if we need to stimulate the demand to clear out the inventory. Until we really scale production, I am comfortable with Tesla basically making no money at all, assuming that Tesla does not use advertising to create demand. And also, let's not forget that there are still many cost-saving measures that Tesla can implement that it has not yet, which we know would certainly work. For example, so many Tesla vehicles still do not have the front castings. To implement these, of course, we need to shut down the production temporarily, and then we will see the benefits in the margins. And eventually 4680s will scale, and Tesla will use structural battery packs in every single vehicle.
We're still at 18.1% of gross margin. This is phenomenal.
That's a
Maybe
good
different
number. That's
rate.
not the problem. The problem is not the 18.1. The problem is Elon saying we're not going to commit that that's the trough. And again, if you're an institution and you own the stock, that's the one thing that you were banking on this quarter, and they couldn't deliver. I mean, I'll throw it back to you guys. If you're all so bullish about the call that it was such a good, why is the stock down 10%?
I will read to you one of Gary's tweets which happened right before the earnings call. Everyone is too focused on actual Q2 numbers. Tesla has beat on adjusted EPS in 8 of the past 10 earnings reports, but Tesla stock has gone down in 6 of those 10 earnings reports. Reasons: low quality beats, weak guidance, or sell the news. Invest long term. It is also worth pointing out that Tesla is up 140% year to date, and when a stock rallies so much and so quickly, it's really no surprise when a stock drops 10%. If Tesla completely canceled the Cybertruck and the next generation vehicle and said we are not releasing any new models basically ever, yeah, I would be paying very close attention to what Gary is saying, but I think Tesla's future is mostly in the next generation vehicle, and I don't think that they have so much to worry about what is happening right now. I think this is a little bit like worrying about the margins years ago when Tesla only had the Model S and X, and saying that, oh, well, Tesla will never release a smaller Model X and a smaller Model S, so therefore we only need to pay attention to what margins are here today. I'd say listen to Gary. not here on video, but what he said right here, invest long term.
I sent a tweet out that says it looks like Tesla's COGS reductions are starting to come in line, if not exceed MSRP reductions. Elon liked the tweet.
Everybody knows that everybody agrees that costs are coming down quicker than selling price. But what people are looking forward, they're not looking backward. Okay, so what people are saying based on Elon's comments is the Fed is going to raise rates next week, and therefore Elon may use that as cover to bring prices down again. And look, I look at revisions. So when you see analysts who get paid to be right, okay, and sometimes they're not, but that's how they generate commissions, because they get ranked as, a higher ranking analyst if they're correct. They're all bringing estimates down, right? They brought estimates down for auto gross margins for the rest of the year. They brought estimates down for 2023. They brought estimates down for 2024, even though you have all this good news. And what came across to most institutions, and I'd say it came across to me, is almost throwing out, well, we're in negotiations with some OEM on autonomy. It almost was like, well, why are you saying that? I mean, are you desperate? Are you know that there's like bad news here? Is that what you're trying to get people to believe? Because that's just not something you would bring out now. You wait until you're there and then you announce it. That's like so pie in the sky that's a positive.
I am convinced that eventually Elon will get it done, but I'm just not so sure about the timeline. Gary said earlier that he does not think that automakers value charging that much, and that still took so long for all of these automakers to make deals with Tesla. So with something like full self-driving, if Gary is right and automakers think this is much more important, therefore we are a lot less likely to partner with Tesla, this could take longer. And this could take until Tesla actually has full self-driving that is safer than human driving. I mean, these automakers waited until the absolute last second to partner up with Tesla on the supercharging network. But the moment we had the first one, all of them started coming immediately. It happened so quickly. So sure, we can doubt Elon, and we can doubt that maybe this current automaker that is talking to Tesla is not really all that serious maybe right now, but the moment someone makes a deal with Tesla, probably many more will come too, very quickly. But instead of the stock going up just 40%, I think the stock could go up a lot more. And Ross is actually quite happy with Tesla right now.
So we're still seeing the pressure, but not as much so, and I think this could be the bottom for margins, which is very positive for the stock. And one can argue that its valuation is justified in here. And for investors, I think, there's not a lot of big cap companies growing revenue by 47%. So it's an impressive result by any means, even though margins are lower.
So while I do understand Gary's concerns, I would say
this is huge.
And YouTube says you should watch this video next, but if you haven't finished watching this Elon Musk interview, watch this one first. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.